Well, we'd love to get an update. We have latest numbers for 2023 from Fortuna, record production numbers, and we also have gold prices that just recently hit new record highs. Unfortunately, the mining stocks don't seem to be reflecting these numbers. So what is it about the markets right now, despite all the success you have in growing your production and adding new mines and having some real good success recently, paying down with debt and good, profit margins are happening. What's happening? Why isn't it being reflected in the share price?
I think, Peter, is a common theme that the performance of mining equities has been dramatically lagging, right? If we look at gold price, yes, we are trading at nominal highs, making a floor at $2,000. I particularly think it is an exciting time for gold right now, as we seem to be building potential energy at around the $2,000 level. But I'm not in the business of forecasting gold prices. But on the mining equity side, if I compare where we sit today with respect to where we were a little over a decade ago, back in 2011, when we saw gold trading also at around $1,900, peaking at $2,000, the industry margins were, 1 to 2 times cost, right? And that's why you invest in mining, right? Those are the type of margins and returns that you look for in mining equities. The average AISC, all-in sustaining costs for the mining companies was significantly lower. And what has happened over the past decade is that inflation has eaten away a lot of those margins. Today, if we look at third quarter 2023, global the World Gold Council figures for average AISC, the all-in sustaining cost for the global gold mining industry hovers around $1,400, right? That's cash cost plus sustaining capex, $1,400 per ounce. And gold is trading at $2,000. Those $500-600 represent what, a 40% margin, and that's not considering taxes nor other things that do impact AISC on top of that. So AISC is not a perfect measure of margin either, right? Is what gets pretty close to it, but not perfect. So I think there is a lack of appetite on the mining equities, just because the margins of the industry have been compressed with respect to a decade ago. So we tend to look at gold at nominal highs, and we get excited by that. But on the mining equity side, our margins, we're working for less margin than a decade ago, right? As on an average for the industry. So I think that weighs heavily on the valuations of the entire sector. I mean, today, to replicate 2011, 2010, I think we would need to see, again, I'm not forecasting, but I'm just making a reference. To see those kind of margins back again, we would need to see what gold trading at $3,000, $3,500 per ounce, right?
That would return those margins to the level which would really draw investors back into the sector. But as you said, you can't control the price. You're in the business of mining, and your focus is in developing these assets for the moment when you can capture a really rapidly rising gold price. So until these margins come around and investors do that, you're really actively growing, developing the company. You had a record 2023. Gold equivalent wise, it's about 450,000 ounces. So tell us more about what brought this production up so significantly in 2023 and what to look forward to in the coming year with even additional higher target in gold equivalent ounces. I believe you have just around a 500,000 ounce target potentially on the range for 2024. So what is driving this growth?
Yes, and as you know, we made just as a bit of a recap for your audience, we made a controversial move back in 2021, expanding our business to West Africa, right? That was a long-term decision that caused controversy at the time, and that controversy weighed on the valuation of the company share price. But it was a sound long-term decision made, back in mid-2021, and the growth that we are exhibiting today in 2023 and into 2024 is a result of the expansion of our business into West Africa. We successfully commissioned our newest mine, the Séguéla mine in the Ivory Coast. In the third quarter, we reported all-in sustaining cost of under $800 per ounce.
Wow.
Right? So we are talking about margins, right? In Fortuna, what we really focus on is having a company that can perform throughout the precious metals price cycle, and not just when prices are peaking or we're in a well-established bull market, because investors, Peter, can time when they come into the sector, when they can purchase gold, or when they can purchase shares in mining equities, in mining companies. But we as miners, we're mining on a good day and on a bad day, right, for prices.
Mm-hmm.
So we focus on assets that can perform throughout the precious metals price cycle. And our expansion into West Africa not only brought more ounces, but also low-cost ounces that contribute to that vision that we need to thrive in any market. So yeah, and into 2024, we're guiding for continued growth, 500,000 ounces of gold, almost, no? That's the upper end of our range for production, 450 to 500,000 ounces of gold, and that's a gold equivalent. And again, that's driven by our West African side of the business.
And so with that, you recently expanded even further into West Africa with another acquisition, another project, another country. I see you have a huge budget allocated to this new project. I believe it was just under $10 million for over 40,000 meters of drilling. So if we could talk about also not just Séguéla, but this new project, Sud-Dima, I believe.
Diamba Sud.
Okay. If give us a little more insight into this, because this looks like this is one of the next big focus areas for the company exploration wise, as you continue to also obviously spend a lot of money on all your projects, but this one is kind of a new one for investors. So tell us some more about this asset.
Yes. Well, as you know, we are well anchored in Latin America, operating 3 mines, and in West Africa. And I have to say that today we're seeing more opportunity flow coming out of West Africa. And the acquisition in 2023 of Chesal Resources, an Australian listed company, where the main project in their portfolio was the Diamba Sud gold project, speaks to that, right? So Diamba Sud is an exciting opportunity for us. We still view Diamba Sud as an exploration stage property. So we have a $17 million budget allocated to Diamba Sud in 2024. Out of those 17 million, 11.5 are ticketed for exploration, and almost 3.5 million for engineering and environmental work. Because we believe that Diamba Sud is a project that can progress quickly to fill our development pipeline. We have a high expectation that Diamba Sud can move quickly up the development stage ladder, right? Today, still a sub-million ounce deposit. No, it's a gold deposit in a most exciting, at the core of a most exciting gold belt between the Senegal and Mali borders. This one is we're on the Senegalese side. And but in the neighborhood, on the same structures, on the same rocks, on the same geology, we have world-class deposits like the Lulo-Gounkoto mine in the portfolio of Barrick, or the Fekola mine in the portfolio of companies like B2Gold, right? So those mines are across the border on Mali, but on the same geology. So we're quite excited about this one. We're putting the time, the effort, and the money to have it move quickly up the development stage ladder, right? So yeah, and again, and as I said in the beginning, speaks to the opportunity flow that we see coming out of West Africa. Yeah,
A lot of it's a very hot area, as you said. A lot of senior producers are actively developing projects and exploration and investing in this area. It seems to be one of the hot gold mining spots right now in the world.
if you look at an analysis on cost per region, West Africa ranks among West African mines. I mean, and Africa is a big continent, of course. We're talking about West Africa, Francophone West Africa. And that part of the world ranks among the lowest cost gold producers in the world. If you want to be a force in precious metals, it is our opinion that you have to be there. Who's there? Well, Anglo, Barrick, Newmont, very successful companies like Endeavour Mining, Perseus. So, you know, all of West Africa is not necessarily a vacation destination. You know, there are challenges in those jurisdictions. Most of those are you know, young developing democracies that swing from democracy to authoritarian governments and whatnot. So it's not for the faint of heart. But on the common theme among most of these nations in West Africa is that they all value responsible mining, and they foster responsible mining. And that's why over the last 20 years, we have seen such an expansion of gold production in that part of the world. Yeah.
Is that because it provides such necessary and important foreign exports? In other words, it provides dollars for the country and helps to develop these countries. The mining is quite important, I imagine, for their own development needs.
We contribute in so many ways to developing economies. Right? It's not just our taxes and our exports that contribute to the health of the economy. Remember that we work in remote areas, so we bring opportunity, much value opportunity to areas that have been, you know, let's say, outside of the reach of government, public services, education, sanitation, health. We develop our business in areas where in these developing countries, usually the government doesn't really get there in any effective manner. So we become development poles, right? So it's not just going there and providing jobs. Yes, of course, we provide jobs. Of course, we focus on training and providing quality employment to our near neighbors. But it's much more than that. No, mining establishes itself responsible mining as a strategic partner in our host communities, and we help them achieve their development goals. That's what we do. and we contribute to the federal governments, to the central governments, to the local communities. It's not just okay, we're good because we pay taxes and create jobs. It's not just that. That's a short-sighted view of the contribution of mining.
Yeah, I don't think that's very well understood by those who really don't invest or follow the industry.
As I say, it's not like our mines are developed on an industrial park on a suburb, 30 minutes from downtown, and the people around have social mobility, right? Social mobility is something that in the Western developed world we give for granted, right? You can go from working in one manufacturing plant to the other, or from one job to the other, or change cities in search for better opportunities. In these remote areas, in developing economies, people don't have social mobility. Migration is a tragedy, no? The migration of the people is a tragedy. It's a humanitarian tragedy, it's crisis. And us coming there and creating opportunity and training people so that, if they choose to do so, they can migrate with dignity, with a skill,
Right.
with training, with the base of a competitive salary and income that they can save, and they can have choices. No,
right. I think that's really interesting and important. I have been to a couple dozen mine site visits, and they're very rare next to a big city or anywhere. They're in remote areas which are not touched very much so by governments, and they don't have very many or any opportunities. So it can really change things for people.
So going back to your question, or the original question about business in West Africa, all of these nations are welcoming to responsible mining. No, sometimes, like in any relationship, there is a negotiation, but they all want mining.
Very interesting. Let's talk about Mexico now. The San Jose mine was a bit surprising in the update on the production numbers for last year and forecast for this year, that the San Jose mine looks to be closing sooner than anticipated. We did have some interesting, exciting news recently, a discovery, the Yessi vein, I believe it was named. So can you give us a little bit of insight what's happening there? I saw there was, brownfields exploration budget at San Jose for this year. Is it set to close at the end of this year, or what's going on exactly?
Yeah, our guidance for 2024 should have not been a surprise to anyone, really, because it's on our disclosures. We at the close of 2022, it's in our presentations and disclosures. We were indicating that we had reserves for 2.5 years. No, so that was at the end of 2022, beginning of 2023. So 2.5 years is all of 2023, 2024, and half of 2025. That's what, a year ago we guided in our disclosures. So 2023 has elapsed, and we're looking at 2024. And what has happened is that cost rises in Mexico have taken away from our reserves. And instead of looking at a year and a half of life of mine based on reserves, that has shrunk to basically 1 year, right? So if we're discussing anything, is the cost creep eating away 6 months of production in our life of mine? No, that's what we're talking about. So the appreciation of the Mexican peso and general inflationary pressures across the mining sector in Mexico, contractor costs have had an impact. And the tail end of reserves at this mine are lower grade and more sensible, no, sensitive to more sensitive to cost creep, right? So what we're guiding now is 2024. Now, just let me make a parenthesis here for a second. When we acquired the West African business in 2021, the Yaramoko mine was set for closure in 2023. Today, Yaramoko had an excellent 2023 where we upgraded guidance and delivered almost 120,000 ounces of gold. We're looking at a very strong 2024 and a very strong 2025, and that is on the back of exploration success. So, you know, I'm cautious. I'm telling you how it is. We have 1 year of reserves today. At the beginning of 2024, we can see 1 year of reserves at the San Jose mine. But as you well pointed out, we have an aggressive exploration budget. The Yessi vein continues yielding, you know, grade and the expectation that we can continue mining beyond 2024. That's still to be seen, but we're not sitting on a couch, you know, waiting, crossing our fingers or praying. We're drilling like hell here, right?
Yeah.
Our geologists are there. We're testing our best ideas, and we're finding grade. You know, the drill bit will tell us, but by mid-year, second half of the year, I think we should circle back on this conversation.
Okay, that's good to know that what's happening there. I imagine closing down a mine takes a lot of time and capital, and it's something that takes years to prepare and accomplish too. So it's a lot of different moving parts.
You know, and turning off a mine is not just like that, right? Because I mean, you will usually, I mean, a mine closure plan is not something you execute in 6 months or a year, right? It's a multi-year plan, includes monitoring, multiple activities. And it might be the case that we do not want the mine to be closed before we complete our exploration programs that could continue going for, you know, months or years beyond the end of 2024, depending on what we see. So we might go, instead of on a closure and demob and remediation plan, we might go into a care and maintenance, for example. So we have to keep flexible, because exploration is you know how it is. You know, we can change the story with a drill hole.
And on that note, you're globally on all your projects, you're spending, I believe it's over 30 million in 2024 is allocated. So quite an aggressive year ahead in exploration and on all the projects. Seems to be a big theme for this year is developing some more of these assets, some of the ounces.
To talk about, you know, how we are funding our exploration and whatnot, I would take a step back and talk about capital allocation. What are our capital allocation priorities, Peter? And our capital allocation priorities today are: one, debt repayment; second, organic growth. So we have aggressive exploration funding, aggressive Diamba Sud, no, funding, and the bottlenecking of the Séguéla mine, no? So I would say that those are the two primary priorities with respect to capital allocation: bringing down debt and organic growth. So all of those two initiatives are very well funded, and we can speak about those.
Well, I imagine the last quarter was quite a successful one for Fortuna. You announced $41 million in debt reduction. Another, I believe the prior quarter was also around 40 million. So
40 million.
40 million. So you're seeing quite a, I imagine, success coming from Séguéla and other assets. So you're in a very strong cash flow generation period.
Yes, I mean those sizable payments on our credit facility, as you pointed out, 40 million in the third quarter, 41 million in the fourth quarter. You should expect to see us making continued aggressive payments in the first quarter of 2024 and onwards, are a reflection of the health of the business at these prices. So we're generating significant free cash flow for a company of our size, and the deployment of that cash flow is towards those two priorities: the debt repayment. So we're not a highly debt leveraged company by any means. No, our debt to EBITDA ratio today hovers around 0.3. You know, in the or
Nice.
facility covenants, I think the ceiling for the net debt to EBITDA ratio is 3, and we are a tenth of that, right? We are 0.3 today. But in spite of that, we believe a mining company should be run with a fortress balance sheet, and we are going to be reducing the debt aggressively, and we should be completed with that sometime this year, right?
Fantastic. Yeah, that's a really, I imagine it's gonna make many analysts upgrade their views on Fortuna. You're really strengthening the balance sheet. You're developing the assets. So in this market still, you see a lot of gold assets really cheap. You took out Chester Resources. Is there any other ones? Are you actively looking around?
You know, we're always actively, seeing what's happening around us, right? In all the jurisdictions where we operate, we view ourselves as a regional player, Peter. So we're focused on these two regions where we are today, LATAM and West Africa. And yeah, we keep a very active presence there, and yeah, searching for opportunity. Absolutely.
Excellent. Is there anything else that didn't touch upon for the coming year that the company is looking to be focusing on? And
I think the most exciting topic resides around growth, and in an ever depleting business like ours, mining, the ability to replace reserves and grow is key, right? So what are the levers that we have today in the business? Well, we touched on them now. I would like to highlight them. Diamba Sud, progressing. We have a $17 million budget allocated to that, 11.5 of which is just exploration drilling. So and about 3 million in engineering and environmental studies. So we are fast tracking that one. Second is Séguéla exploration, right? Continues to look very exciting on the exploration front, and we also have a sizable exploration budget there. I see a mine that will operate beyond a decade there easily, and a mine that is already giving us 20% above nameplate capacity in 2024, only after 6 months of being commissioned.
wow, yeah.
Right? So those are the big levers to pull in the business with respect to low cost additional ounces that we can bring. And on the more defense side of things, well, making sure that we have the ability to replace reserves at the mines that are running short on reserves. And that's just how you manage the business.
Well, 2023 is quite the transformational year. The transformation and with Séguéla coming online, a real boost in cash flow numbers. You made an acquisition and furthering your presence in West Africa. So quite a big year for Fortuna. This year is continuing on with those things, but maybe in some ways, I mean, a lot of work, but less, I guess, from the construction capital intensive side, where now your capital is going more into these exploration and other things. So it lost not as much capital intensive needs for the coming year.
No, and that's why we're, deleveraging the balance sheet and putting money to work on organic growth. We have only one large capital project in the portfolio this year, which is the leach pad expansion at our Lindero mine. That's why the all-in sustaining cost at this one mine looks burdenous and heavy in 2024. The leach pad expansion is on its own a $41 million budget to be executed in 2024. But that project, the leach pad expansion, serves the mine for a decade, right? So, but you have to, what's efficient, effective, is not to stage it over the life of mine, but rather execute it all at once and get it over with, right? So we're building in 1 year a $41 million project that will serve the mine for 10. So we have to just do what makes good technical sense here in this one case, and carry the ASIC in a heavy ASIC that burdens the ASIC for that one mine, and of course has an impact on our consolidated ASIC.
Fantastic. Well, good time to make some investments. See the gold price here, trying to make a move. So hopefully that will start to reward all those ounces that you're producing. But it's great to see the company really in a much different position and place than it was years ago. It's a significantly different company from a couple of years ago. And it's nice to see that this year seems to be quite a good year for the investor side, where you're just really benefiting from a lot of those investments. And it's nice to see that you're making, the next investments to continue on Lindero for another decade. And we'll have to follow back and see how San Jose progresses. But overall, the company is fantastic to see, upwards of 500,000 ounces from years and years ago. The growth has been incredible.
It's been quite a journey. I'm looking behind you at the screen where it says SilverSeek 18 years anniversary and GoldSeek 20 years. Well, Fortuna was founded 19 years ago, so we came to existence pretty much at the same time.
I remember I was an early investor in Fortuna, and it's amazing to see some of these companies, like Fortuna, just grow from very small starts, from very small beginnings, and they're really, I mean, compared to back then,
Fortuna,
it was just
in those days was 3 guys,
3
big ideas, and very, very little money. Today, we're a company, producing 500,000 ounces, close to 5,500 people, a workforce of 5,500, making Fortuna happen every day. And it's been quite a journey.
Yes. Well, congratulations. What a success. And love just seeing things grow over time. And I've seen Fortuna make some big investments during the soft markets and times when other companies aren't really doing as much. And in the end, when the gold price and silver price come around, then everything's set to benefit the investors. So.
You have to be disciplined and try to be as counter-cyclical as possible in such a cyclical industry. You have to try to be as counter-cyclical as possible. The challenge with that is that it's tremendously difficult, because to try to invest capital in mining when everybody hates the sector is challenging. You have to garner investor support, shareholder support for a big capital project at a time when the gold sector is unloved, or the silver sector is unloved. It's tremendously difficult. Now, when gold prices are running and everybody and their dog wants to build a gold or silver mine, then what happens is that this is an industry that has a lot of structural bottlenecks. So the experienced engineers, there aren't enough. The manufacturing capacity is not big enough. People forget the dramas. There were not enough tires for the industry. You couldn't replace tires in your trucks. You couldn't, the lead time to get a sag mill, a crusher, or a truck, delayed projects months, if not years.
Mm.
So you had to build complex projects with young upcoming engineers without all the experienced guys, because there's only so many of those. So that's when you want to be building a mine? Probably not. You want to be counter-cyclical, build a mine when you can get the good engineers, the A teams from the service providers, the lead times are reasonable, right, on delivery of equipment and things and services, and there is not so much pressure, right? So, but doing that is easier said than done.
Yeah. Interesting insights. Well, we'll look forward to the next cycle, and when everyone else is scrambling for resources, you can give them some
Harvest.
visits.
We can harvest at that time.
Yeah. Jorge, thank you very much for your time. Great to catch up, speak with you soon.